Hello and welcome to My Finance Teacher. Today is 1st of October 2017. Let's have a look at what has been going on with gold over the last week and what do I expect in the coming few weeks. Early this week, when gold was close to the price level of 1300, it bounced up for a couple of days, for 2-3 days, since 1300 was the support level formed by the prior two peaks in gold price. And after this short-term bounce, gold continued its decline up to the end of the week. Now, what do we see on this chart, which is a daily gold price chart? We see that we're approaching this 100-day moving average, which might provide some support for the gold price. And we also see that on the 10-day RSI, gold is close to oversold levels, although it's not oversold yet. What else do we see on the chart? If we look at the Fibonacci retracement numbers over the last several weeks, we have retraced 50% of the rally since early July. The rally that has been going on since early July, over the last several weeks, we've retraced 50%, half of that. And 50% retracement is often a support zone as well. So on one hand, one might think that gold is ready to start another advance, another move up. However, I believe we still should expect gold to continue going down, possibly to 62% retracement, which will give us the price level of just over 1260, and even possibly to 69% retracement, which will give us a price level of just under 1240, just around 1240. The reasons for this possible continuation in the decline of gold price is what is going on with the dollar. So let's have a look at that. Here is a weekly chart of the US dollar index, and since the beginning of 2017, dollar lost 12% of its value against other currencies, against the basket of other currencies. 12% is of course quite a lot, and technically the reason that happened is because in late 2016, early 2017, dollar was overbought. It was also stretched considerably above its 50-week moving average. This blue line here is the 50-week moving average. So it is only natural that dollar regressed back to its average, back to the mean, regressed back to the mean. And since it had been overstretched on the upside, it became overstretched on the downside. Although I didn't expect that this stretch on the downside will be so strong. Since we are overstretched on the downside, the dollar is now oversold as well, or had been oversold a few weeks ago. Again, it is only normal that dollar regresses back up close to its mean. So I expect dollar to continue going up for next at least a couple of weeks, and maybe considerably longer. Generally, whenever dollar goes up, gold goes down. It is not always the case, but generally that is the case. And that is why I expect gold to continue going down to 62, maybe even 69% retracement to the price level of 1240, and maybe even to the price levels of 1260 and maybe even down to 1240. Now let's have a look a little further out. Say gold does continue down over the next few weeks, down to somewhere between 1240 and 1260. We'll see some support around those Fibonacci numbers, and at that time we will be in the second half of October. This intermediate cycle started in early July, and by the time we reach 1240, 1260, the intermediate cycle would have been going on for 4 months. Generally these cycles last for half a year, so my expectation is we'll get a bounce out of those levels, and we will only have enough time for a last daily cycle within this intermediate cycle. Since it's the last one, and since we would be in the declining phase of the intermediate cycle already, the bounce is not going to be strong. The decline over that should create a lower low to give us the intermediate cycle low, finishing probably somewhere in November, possibly December this year. So that is my expectation. If you see something else on the chart, I would be interested in your opinions. You can share your opinion in the comments below, and while you're at it, please hit the like button. I would really appreciate it. Thank you very much.